Today, we're diving deep into Pfizer's first quarter 2024 earnings results. We've got a lot of ground to cover, from their core business performance to exciting new developments in their pipeline. Before I start, I want to warn you that neither am I a doctor, nor have I studied Latin, so I will butcher all of the weird drug names, and I hope you forgive me. Pfizer kicked things off by reporting a solid start to the year. Total company revenues for the quarter were $14.9 billion, reflecting an operational decline of $3.5 billion, or 19% versus last year. This decrease can be attributed primarily to the anticipated lower global demand for their COVID-19 products, Comirnaty and Paxlovid. However, there are some bright spots. Excluding contributions from these COVID-19 products, revenues totaled $12.5 billion, indicating an 11% growth compared with the prior year quarter, amid a strong performance from blood thinner Eliquis, which Pfizer markets with Bristol Myers. Despite the revenue decline, Pfizer's commitment to profitability remains strong. Pfizer reported adjusted earnings per share of 82 cents, which beat the consensus estimates with massive 31 cents. They also increased their revenues with 11% if we exclude the impact of the COVID-related products. This is a big misconception I see a lot of people having about the company, and a reason why, if you invest in a stock, you need to read more about it, not just look at the financial metrics. While if you look at the balance sheet, you would think their revenues are falling off a cliff, it is basically because they skyrocketed during the pandemic. The way I explain it is this. If you make $5,000 a month, every month, but in April you get a huge bonus of $15,000, and then in May you're back to $5,000, does it mean that now you're worse off because compared to April your salary is down? I wouldn't think so. The COVID medicines were a temporary boost to Pfizer and should be treated as such, nothing more. And while yes, the chart of the revenue might be telling you it's falling off, what is important is that Pfizer's non-COVID portfolio is growing at 11%. For example, their oncology revenue grew 19% compared to the last quarter, driven partly by the acquisition of Seagen, of course. Additionally, they emphasized continued investment in R&D, which is crucial for long-term growth. Speaking of that, let's talk about Pfizer's new products with growth potential. Orexo, a highly effective treatment for a rare disease, has received early access in some markets and shows promising efficacy data. Based on the ongoing studies, Orexo could prove to be a significant player in the future. In general, Pfizer's pipeline is brimming with potential game changers. Here are a few highlights to keep on your radar. The marstacimab, however you pronounce that, drug holds promise for treating both hemophilia A and B, potentially expanding Pfizer's reach in the hematology space. The COVID flu combination vaccine. This innovative vaccine aims to combat both COVID-19 and influenza with a single shot. There are also other pipeline developments, but for the sake of saving your time and not turning this video into a bad medicine lesson, I will skip trying to pronounce them and go straight into the obesity focus of the company. While there haven't been any major announcements regarding specific new drugs, Pfizer remains committed to the obesity space. They acknowledge this is a crucial area with a massive unmet need, and they are actively progressing multiple agents in both clinical and preclinical stages. This continued focus indicates Pfizer's long-term strategy to address this global health issue. Bearing in mind what Eli Lilly and Novo Nordisk managed to do recently in terms of results and share price, a breakthrough in this market will be huge for the company. So let's look ahead. Which are the key factors to watch? As Pfizer navigates the rest of 2024 and beyond, there are a few key things to keep on your mind as an investor. First, commercial rollout. The success of new products like Orexo and the RSV vaccine will be closely monitored. Their ability to gain market share and generate revenue will be crucial for Pfizer's future growth. The Inflation Reduction Act. This act could potentially impact future pricing and margins of Pfizer's drug. The company will need to adapt its strategies to navigate this new legislative landscape. And lastly, the R&D pipeline. Pfizer's continued progress in developing innovative treatments will be a key driver of future growth. Their ability to bring new drugs to market successfully will be essential for long-term shareholder value. Overall, Pfizer's Q1 earnings results paint a picture of a company that is well positioned for future growth. Their strong core business, focus on innovation, and commitment to shareholder value are all positive signs for investors. However, uncertainties around Paxlovid and the Inflation Reduction Act are factors to keep an eye on. Currently, the company yields 6.5%, which might seem like a great deal, but always remember that pharma companies have the wild card of the research and development efforts and the lack of visibility on whether the new trials will succeed. So you should always have this in mind. This is why I am not a huge fan of holding them outside of ETFs. Speaking of which, if you would like to see my top 4 stocks and ETFs for the current environment we are in, go to the link in the description and I will send the report to your email address for free. With that said, make sure you check this video that should have appeared on your screen to continue with your investing education. Check important disclaimers in the description and I will see you in the next one.